Hey guys, let's chat about what's happening in the real estate market right now. There's a lot of fear of what will happen to the real estate market. Questions like, what if the market crashed like in 2008? What if my stock goes down? What if the war keeps going on? What if interest rates keep rising? What if inflation keeps going up? What if inventory keeps going up? Oof. The real estate market has more what if analysis than Microsoft's Excel today. Let's first talk about the market crash in 2008. I was there. The market overheated due to loose lending standards where one could easily get a loan without making any down payment whatsoever. That ain't happening now. That's why banks are asking for 10 to 20% down in order for you to showcase some skin in the game so that you don't have the ability to simply walk away. So on $1 million purchase, if you're making a down payment of 10%, that is $100,000 or 20%, which is $200K. You're not going to simply walk away from it, would you? So no, the market is not going to crash like it did in 2008. Also, the Bay Area was not as affected by the housing crisis as the rest of the country was. So make the decision, else you will only be left with a what if analysis and no equity. You are buying and holding for the long term, so even if it falls, it will go back up again. People that left their homes in 2008 never thought that those same homes will double in value or more by 2021. Next, what if interest rates keep rising? Interest rates are still cheap. Yes, they are more than what they were. Anyway, interest rates have always been much higher. I bought my first house at almost 6% in 2002. So they can go up or down, but you still have the jumbo rates that are in the high 4%, and you have the option to buy with a 7x1 arm or a 10x1 arm where interest rates are still low. You do not need to go for a 30-year fixed. Have you wondered what is the interest rate on renting? It's 100%, as you're getting nothing back. So is it better to pay 5 or 6%? Remember, you are paying somebody's mortgage. If not yours, then somebody else's. Next, what if my stock goes down? Stock is paper, real estate is not. Stock has fallen, real estate has not, in the Bay Area, at least not by that much. Sell your stock as it's free money. If you feel the housing market is going to crash, what makes you think your stock will do any better and why? Real estate does not rise and fall like the stock or the crypto market, let's face it. Most people are dependent on their stock to make the down payment for their home. If stock gets wiped out, there goes your down payment and there goes your house. You are only left with a what if analysis. Next, what if inflation keeps going up? So will housing. In fact, it is proving that housing is the best hedge against inflation. Take a look at this chart. The inflation rate compared to housing appreciation over the years, from the 70s to today. Home prices have increased with higher inflation for the most part. Next, what if the war keeps going on? Okay, I can't understand this, but it's not the first time there is war. Yes, agreed, there are supply chain issues due to it. But we forget Iraq, Syria, Afghanistan, and the Avengers happening not too long ago. Did that affect the housing market? No. And at that time, America was at war. This time it's not. It's like saying, what if the war stops? Will real estate in the Bay Area go through the roof? Of course not. Next, what if inventory keeps going up? It's June. Inventory goes up every year during this time frame as it's holiday time and people are looking to move due to schools before they open in August. So expect that to happen every year. This chart indicates the seller's market at less than a 6-month supply. Currently, the Bay Area has only 4 to 5 weeks of supply. We are far from being in a buyer's market. So the main question is, when is the best time to buy a house or real estate? The answer is, when you can. Real estate is not governed by macroeconomic factors, but only by micro and hyper-localized economic factors. So a home buyer looking to make a purchase in say 95120 is competing with only 3 to 4 people for the same house, not with the macro factors of the world. Today, you have the down payment, the credit, the high-paying jobs. Tomorrow, you might not have the stock to make the down payment. Or what if one spouse loses their job and is laid off? If you purchase, you will still be left with a house, not a what if analysis. Get out and buy while you can. Thanks for watching. Stay tuned for more.